150 million tax-paying citizens and entities in this country. Making a lot of money, gonna have massive capital gains.
What's up, people? We're answering tax questions. It's Friday, and that means your tax questions I am here to answer. Type them into the thing and we'll see what we can do. Let me see. What was a question that ended the last time somebody asked me a question? All right, here's one. Gift tax, right? So how does the gift tax work? Let's say I want to gift somebody a $60,000 car, okay? Does that mean that I have to pay taxes on $45,000 of it? What does that mean? Well, okay, so the gift tax works like this. The giftor pays the gift tax, not the giftee, right? The giftor, that's the person who gave the gift, not the recipient of the gift. And then so what happens is there's two things going on at once. One, you have the gift tax credit, the exemption that you can take on gift tax, which is $15,000 a year, and that's per individual. So you can give everybody in your life $15,000, and you wouldn't have any gift tax consequences for that. Another thing is the lifetime unified credit. That's your estate tax, but it also goes against your gift tax too. And what that means is until you hit 10, 11, it's going up to $12 million a year, in your lifetime, then if you give a gift to somebody and it's over $15,000, then the excess just goes against your lifetime unified credit. So in the example that you give somebody a car that's worth $60,000, 15 of that is the gift tax exemption, and 45 of that goes against your lifetime unified credit of literally above $10 million. And so if you're single, it's 20 if you're married. So unless you're giving a lot of gifts, you're never going to end up paying sales tax, gift tax. All right. Okay, so here's a question. Let me answer this for you guys. How do people get away with not paying taxes on real estate when they pass and give their kids the real estate, the asset? Okay, so all right, there is a concept in American taxation. It's existed since as long as I think. Probably since the 30s when the IRS was founded. And basically what it is the idea of a step up in basis. And this definitely has existed in the last several decades of taxation for sure. Now what this means is, let's say I own a property and I have a son or a grandson or an heir. Really, it just has to be an heir. And so my property, I bought it, in 1960 for like 10 grand, and it's in California, and now it's worth like $4 million. Okay. And, so if I had sold it right now before I die, I will, pay the, capital gains taxes on that property. But if, I donate it to, or if I give it to my heir, and they get the step up in basis. So let's say I die, and I have to die for this to happen too. So I die, and it goes to my son, my grandson, my heir, whatever. And that means they get that property at the stepped up basis of when I died, which would be $4 million. So that means if they sell it, and around the time that I die, they're not going to have any income tax consequences. Now, if they sell it, a few years later for $5 million, then they would owe taxes on $1 million instead of the entire $4 million. So that's one way that the tax code provides that anybody, you don't have to be rich to do that. You just have to own an asset and die. And there's also ways that if you trust people, that you could avoid paying taxes on appreciated properties, but you would definitely have to have somebody trust you or trust somebody enough to put them in your will and give them that property. So, I mean, with family, it makes sense. With your heirs, with your friends, I don't know, you better trust them a lot so they don't screw you over. But it's one way to avoid income tax. All right. Okay. Hold on, guys. Okay. Is there anything special about filing taxes when all the income is SSDI? Well, yes and no. So if all the income you receive from the government is Social Security benefits, whether it's SSDI, SSI, or both, then you don't, and you're under $12,000. By all those three things combined, you don't have a tax obligation. Now, let's say you are over $12,000 with either your SSI payments or your SSDI or both, because if you get maximum Social Security, it's $2,000 a month, so that would be $24,000. So you're over the standard deduction, but you still don't have a filing requirement because you don't owe taxes on your Social Security income until you already make another $12,500 in real income. And after that point, it is graduated. And I can't remember off the top of my head, but you're going to go from paying a portion of it to half to possibly even taxes on all of it if you make a lot of money on top of your Social Security. However, if all you receive is Social Security, you don't owe any taxes on it. Now, basically, the easy way to remember it is if all you receive is Social Security, you don't owe any tax on it. If you have a job that pays you enough money to live and you get Social Security, you're gonna probably owe half taxes on it. And if you're making a lot more money than that, I don't think you're worried about the $24,000 that you received in Social Security. Is that a degree behind me? Yes, that is my law degree from Southwestern Law School. Classically trained. Okay. Bumblebee says, I haven't paid taxes in a couple years. I'm not sure how much I've made the last few years. All right, so check it out, Bumblebee. So in this kind of situation, is what's really more important than how much you made is what has been reported to the IRS. Now, if anyone has paid you, they absolutely, dogs to donuts, are reporting to the IRS because we have what's called a tattletale system of taxation. And what that means is your employers get to pay less in taxes because they get to write off what they pay you, including what you pay in taxes. So it all shit flows downhill type of situation. Because that's the case, the IRS is going to have a copy of what your employers or anybody else have told them income-wise, and what we can do is take a look at your wage and income statement and figure out what has been reported to the IRS, and then file taxes based on those numbers. That's generally what we do in that situation. If you need help, I got people standing by the phones. Give me a call right now. But yeah, that's how we handle that. And there's no point, especially for years past where you probably don't have the records either. We're just going to go off of what the IRS is saying, and that'll make them happy. Okay. Hold on, guys. Let me get here. Looks like it smells like coconut lotion and farts over there. Probably farts, but no, I think I have... I got the Eucerin. It's just a regular lotion because my hands were kind of dry. Anyways, okay. Let's see. I don't know how slavery would have worked on income tax because, actually, check this out, right? So income tax in the United States did not exist until slavery as an institution was, almost abolished. Around the time of the Emancipation Proclamation, that is when, the income tax first came around from Abraham Lincoln trying to fund the Civil War. So as an American institution, it ended about the time that income tax started, that slavery, that is. So they really didn't, in America at least, maybe in the Confederacy, but I have no idea how the Confederate tax on slavery, if there was one, worked. But I doubt there probably was an income tax at that time, even in the Confederacy, because income tax it's kind of a newer concept. That Abraham Lincoln's income tax was one of the first income taxes, and it was around to fund the war. And then afterwards, it was ruled unconstitutional after the war ended by the Supreme Court, and then the U.S. government had to file an amendment to the Constitution to be able to legally have an income tax. That's the 13th Amendment, and that is why we have an income tax today. And that's why I hear a lot of people say it's unconstitutional, this, that. Yeah, it was unconstitutional until they filed an amendment and made it constitutional. So that's just how that happens. Yeah. Okay, Owen says, I don't pay taxes. That's awesome. More power to you, bro. Just don't get hit up with a bank levy. And if you do log into your bank account and notice that there's no money in it, even if you only owed $100, but they took out $10,000 or more because they can, give me a call. I'll help you out. I know how to get that money back for you. All right. Government, bankers, bosses, and rich are all thieves of the working class. You know, as a political statement, I'm not going to disagree with that. Pretty much everyone is a worker bee for those on top. That is just the way that it works, you know, my friend. Okay. Nervous farts? Nah. If I fart, it's going to be confident, sir, and you'll probably hear it through the video. Okay. So, haven't paid taxes in a couple years. Oh, I answered your question. What we got to do is, if you don't know how much money you made, but you know that you did make money, is let's call the IRS and we'll do a compliance call, and I can help you out with that. Give me a call. Okay, Lalia says, Layla, I don't know, says, I have my W-2. I made less than $3,000, but I haven't filed. Them can do it now. College student for 2022. Okay, so basically, if all you made was $3,000, you don't have a filing requirement. You only have a filing requirement if you make more than $12,500, because that's the standard deduction. However, I would still recommend you do file because, and you're not going to owe anything, obviously, and you'll get something back if you're paying that, if you made that on a W-2, because you're going to get a refund because you don't owe any taxes. So obviously for that reason, but also because in the statute of limitations will begin to close, and if they don't audit you in 3 years, they can't come back to that year for 2022. So you'll be, no matter what actually happened by 2025, 2026, they will not be able to audit you for that year. So that's generally why you want to file taxes every year, even if you didn't make any money. Okay. God says you don't have to pay taxes in my earth. But Jesus actually said, give to Caesar what is Caesar's and give to God what is God, right? And so pay your taxes. And honestly, it's kind of like a situation where it doesn't matter where you are, you're going to pay your taxes to somebody. So like if you're in, down south, they got to pay taxes to cartels, right? So everyone's going to have to pay taxes to somebody. The name of the game is, how can we pay the least amount of taxes as possible using the legal means that exist within the United States and globally as well, because IRS is a bureaucracy and we can use their laws and everything like that against them. Okay. You're saying my hair is awesome. Well, I appreciate that. Thank you. Lawyers are liars. Well, I'm not saying you can trust lawyers, but lawyers really care about money. That's what they care about. Okay. Yes, I have a Juris Doctorate law degree, and I do taxation. I'm a registered IRS agent as well. We do tax law here. I'm not going to represent you in court when you shoplift something or murder somebody, because I don't give a damn about that stuff. Okay. Thanks, Tyler. That helps. I don't mind filing or paying. Just want to do what helps. Yes, and that's what I recommend you do. And like it said, it's above $12,500 is when you're going to start owing any kind of liability to the IRS. And let's say you made 13,000, you'd owe like $10 or something really ridiculously small. Really starts to build up around like 20,000. Anyways, yeah, just file, because I've had a situation where, you know, when I was 18, 19, I didn't make any money, and I got audited all the way back to those years when they decided to audit me because I didn't file. And you know what? They said I owed them $1,500. I just paid it because, like, why mess with the beast, right? But, you know, just avoid that type of situation. Okay, did you ever get your friend that watch? Ooh, which watch? We go through a fair amount of watches here. Are you talking about the Vicheron Constantine? Yes, we did get that one.
I was like, I don't think you were buying a friend a watch. I think you were buying yourself a watch.
Oh, yeah, I'm still gonna buy myself a Patek Aquanaut, and it's
There's one too that you said you have, like the two of the three. So
Oh yeah, that's the Nautilus. So I either have to get an Aquanaut or a Nautilus. I want a Patek, but I don't know. See, the Nautilus is more like youth, or excuse me, the Aquanaut's more like youthful, and like that one I want has the orange band. That one's sick as hell. Like, it's kind of like the loudest, like, but like quiet at the same time, because like no one is gonna know what it is unless they know what it is. The other one is the Nautilus is the most coveted sports watch in the world. I mean, you have this one, but that one is probably even, that's it. So I don't know. They're both grail pieces, I would say. But to complete the trilogy, I have this one, I have the VC, I would need the Nautilus. I don't know. Okay. Do I have to report the 1099 I got from eBay? It's just some of my old stuff I sold. So, okay, so they changed the rules in the last minute of last year. And so here's what it is for last year's 1099. For this year, you might have to, unless it's over the regular K1 amounts, which was I think 20 grand or 20 transactions, one of the two. And if you had more than that, then you had to report it as 1099K, excuse me, not a K1. And but the new rules of having to report it over $600 or just at all if you got a 1099 did not apply to 2022. On the day before Christmas last year, the IRS, in a real sneaky move, said that they weren't going to do that this year because they didn't have the ability to actually go through with that big of a change in the agents and the staff and all that to do it. And so because that's the case, again, we have another year where that is not the law, and they probably will end up doing it again, but be careful. But your 1099 that you got was for last year, and I'm telling you, yeah, you're good. Unless it was over $20,000, then you are going to have to file that. Okay. What college did I go to? So I went to University of California, Irvine, where I graduated cum laude. And then I went to Southwestern Law School, where I got my JD. And then I went to Loyola Law School, where I studied taxation. Okay. Hold on. It jumps sometimes, and I want to answer all your questions. Okay, let's see. ESPP comes with a 15% discount. If I receive the shares at 15% off sell, and is that it's a difference of capital gain? It might even be ordinary income, because let's see, it's probably a capital gain. It's definitely income, but it's gonna be short term anyways. But so you're gonna pay ordinary income rates on it. Okay. Any tax questions? I know, right? Well, listen, I'll answer anybody's question as long as it's not going to get me banned on TikTok. Mm-hmm. Okay. Am I Ron Jeremy? Awesome. I like this question. And no, I'm not Ron Jeremy, but thanks. That was like an ego boost. I like that. All right. I think my friend Marilyn went to the same law school, Los Angeles. Yep, it's in downtown Los Angeles in Koreatown. And sounds like your friend probably did. Okay, well, Southwestern is in Koreatown, and Loyola Marymount or Loyola Law School is in downtown LA, but they're really close to each other. Okay. Best way to use a 401 to save on taxes. Well, we talk a lot about SEPs, right? SEP IRAs, self-directeds, checkbooks. Those are probably the best way because you could put unappreciated assets into it, pay taxes on them, Roth them, and then have a fully appreciated asset down the line. Now, that's the Peter Thiel method. That's how he made so much money. He made billions of dollars tax-free that way on PayPal stock. But let's say you've got a 401k at work. The best way to have the most deductions every year is to pay into your 401k the maximum amount every year. And you can have an IRA, you can have a 401k, you can have a checkbook, you can have all three at the same time. So you can actually contribute way more than you think you can. The $20,000 on your 401k, I think it's closer to 60 on the SEP on the checkbook, and then, or maybe it's 40. But you can put it in an LLC and put it in the SEP. That's the whole point of that, right? You can do it with gold, you can do it with crypto, and then with a traditional, it's another 6,000. So, whatever. But the best way, if you want to save on taxes, meaning pay the least amount, meaning have the most deductions, is contribute the most amount of money. Can you avoid paying an overdue tax under $1,000? Well, you can avoid paying any overdue tax if you wait out the statute of limitations. Because they don't know how much you owe until you file or they file for you, which is the audit SFR. And once that happens, then they know how much you owe. And they have 10 years to collect from that point. So just be careful because it could be a long time if they have recently assessed you or audited you. But if it's a long time, eventually it's going to fall off. $1,000 is not that much money. What I would do is I would ask for a first-time penalty abatement. It's statutory. I'd probably bring it down to, $600-700 or less. Or if it was $1,000, trust me, it's more now with penalties and interest. So I'd bring it back to where it is. Just get on an easy breezy, 1 year frickin' payment plan of like $80 and pay that sucker off. That's what I would recommend doing, and then you don't have to worry about it, and that would, then it's gone. $4,000, are they really going to do anything to you? No, they're just going to take your either your estimated taxes or your refund for last year and apply it towards that. So, but you're going to get letters in the mail, and then you don't want all that. So just pay it. What happened to my 10 commandments? I agree. What has the world come to? What has it come to? Okay, let's see. Oh, Gagno, Ron Jeremy just oozes some sort of sleaze all the time. Listen, we're going for the classic Ron Jeremy, okay? Like at the AV, the Adult Video Awards, that kind of thing. Okay. Do you know the regulations of someone hiring someone from another country is enough to file Form W-8 ban? Okay, so it's going to depend on the capacity that you're hiring somebody of another country. Just hiring somebody that's in another country, or you hiring somebody that's here from another country? That's going to depend on their visa status, right? Do they have an HB1 visa? Do they have a green card? What do they have? And can they legally be hired in the United States? If they're overseas, it's a lot easier. You could probably just treat them as an independent contractor for ease of everything. Plus, depending on where they are, that's, their payroll systems and everything is going to be different than the United States. I have a developer for my phone company I'm building in Italy, and I pay him, and he has to give his money to the government or something, but it's different. So, yeah. How can I hire you? You guys can give me a call right now. The link is in the bio. Hit the bio, hit the link, and the phone number's right there. I got people standing by. Give me a call. yeah, otherwise you can shoot me a message on the the Instagram link in the bio too. Yep. Okay. Do sole proprietor LLCs get to write off on their purchases? You mean their business purchases? And the answer is yes. Actually, any business, whether you're a sole prop, an LLC, a corporation, partnership, anything that's spent in the pursuit of a profit is deductible. And so you don't need to be an LLC to do that. You can do it as an LLC though, yes, or a corporation or anything else. Absolutely. Not just any purchase, it has to be a business expense, right? But yeah, you can write off your business expenses. Okay, I owe the IRS close to 10 grand. What's the least I can settle for? Well, Dark Horse, if you want to give me a call, I have people that can walk you through and figure that out exactly based on your specific situation right now. Consultation is free, my friend. But the short answer is it really depends on your current income situation, how much the IRS will make a deal with you. So if we can figure that out, and I can give you the exact answer to that question. I missed. Why should I file if I don't work anymore? Well, it doesn't really matter. This is an incomplete question, I feel like, but it doesn't really matter if you're currently working. What matters is if you made money in a previous year and they're saying you owe tax on it, like last year, right? Like that's how it happens. But if you're making no money now or a little bit of money now and you owe a lot of money from the past, that puts you in the catbird seat to negotiate with the IRS over your debt. That's what I do. So if that's what you'd like to do, give me a call and I will certainly help you out. Again, the link is in the bio. That's what we do. That's called tax resolution, tax mitigation. And the fact that you make no money now is a great fact for us to say that you can't afford to pay back those back taxes that you owe. And we'll negotiate it out for a much smaller settlement. Okay. And how can we get the most from our taxes? Wow, that I think is more of a political question. Well, let's see. Whoever's in office is going to use the money that the IRS generates to forward their political agenda. So you see what's happening now. You saw what happened a few years ago. You be the judge on that one. Okay. I had an S Corp I shut down in 12 of 2017. At this point, I can destroy my records, including returns. Make sure you properly shut it down. Did you just stop doing business or did you file for a dissolution from the state? Because otherwise you're going to keep racking up a franchise tax bill every year and you want to make sure that didn't happen. I wouldn't recommend throwing away your tax returns. You might need them. But yeah, I mean, the rest of your stuff, if you're not doing business anymore, it doesn't matter. But keep the tax returns just in case your entity gets audited. Okay. Thoughts on inflation? Man, inflation out here is bad. Everything is expensive and it's, labor. I mean, it's hard to find good labor because there's like literally no unemployment right now, which I guess is good, but nobody's making any money, at least enough to survive. So that's the problem. It's pretty messed up. It's going to get worse before it gets better. The banks will probably, get bailed out again once, none of these big office buildings are paying their mortgages because they don't have any tenants. So it's kind of a bad situation. I would say if you got it, let's hold it for a couple of years before you sell it because everyone's just losing money on real estate and everything right now. Okay. Should I start a business just to save tax on a W-2 job? Well, here's the thing, right? So you can't put a business on a W-2. So it's not going to work directly like that. However, if you want to start a side hustle, something you enjoy doing, that you're going to do anyway, that you could make money doing, you can absolutely lose money doing that thing, and you can write your W-2 income off against those losses. Now that is called the side hustle, and you should definitely do that if you have the time and the type of activity, which could be anything. And remember, I mean, this could be literally anything. There are people who are able to do it with gambling and hunting. The rules are you have to be profitable 3 out of 5 years. That's every other year. So, you can't just win big, excuse me, win big one year in gambling and claim that you are a business. You'd have to win big in gambling 3 out of 5 years, and then you could say you are a business, and that's legit. Okay. Oh, you're saying, I think you got your friend a necklace or something. Yeah, I got him a chain, okay? I got him a chain, and then he lost it, and now he wants another one.
He just asked you for
He
one.
literally just asked me for one the other day. Yes, I got him a gold chain, and then he lost it, and now he wants another one. But I had one of mine break, and I still have it, and so I might give him that one, but I'm like have to secure it with like a freaking lock or something so he doesn't lose it, because he's liable to lose it. All right. If I had a lawyer put money away for my kid if he did anything shady, or how would I get him? I don't know if I understand the question, but if you're trying to get your kid, you could always put your money in the type of instrument that would make sure he didn't get it from you. Certain types of trusts. Ultimate would be a Cook Islands trust, but you could do like a South Dakota or Wyoming trust too. Or just put it in a corporation that he doesn't have any ownership stock of, and then make sure he doesn't get it in the probate proceedings with a trust, a living trust. So that would be one way to do it. If you're trying to get back the shady lawyer, I don't know. If the lawyer screws you over, you can always complain to the bar about them. There you go. Or you could sue them too. Okay. In case you get audited later on and don't have blanks in your history. I don't remember the rest of the question, but let's see. Okay. If somebody filed and lied to get out of paying $30,000 in taxes, how long does the IRS have to audit? 3 years from the filing date. So if you underreported and then you file it, the IRS has 3 years to audit it. And if they don't audit it in 3 years, then you're scot-free. Now, let me give you this caveat. This is true except for in cases of what the IRS is going to call tax evasion or fraud, which is going to be like a lot of money. 30 grand, maybe not. Less than 30 grand, probably, even 30 grand probably just be called underreporting if they found it. Maybe like 100 grand, more than that, and you didn't report it, that's like tax evasion, and they can go back as far as they want because that doesn't have the same statute limitations that underreporting does, because it's like a class X felony. I need your help. Give me a call. Links in the bio. See the thing up in the corner. Click that, and then there's a link in the bio that take you to a phone number. There's people standing by the phones right now. If someone... Oh, no, I already answered that one. Let me see if you got a new question. How does taxes on online sports betting work? Well, check this out, right? So the way online sports betting taxes work is it's just like if you were betting in a casino. You're going to get a WG2? Is it?
That I don't know.
Something like that. Anyways, you get a form from the casino showing your winnings, and then you have to go to the casino and get a form showing your losses so you can write off your winnings against your losses, and hopefully you don't have to pay any taxes. Well, actually, hopefully you do, because that means you won. Sports books betting is the same way. It's taxed the same way. And in the states where it is not legal, they still want you to pay taxes on it. So, and you're going to have to pay tax on it federally, so you might as well just pay taxes on it. W2G, that's the form. So in California, for example, where it's not technically legal, you still got to pay taxes on it, because you have to pay taxes on it federally because it's been reported from the other state government or the agency, the betting agency, even if it's in a different state. Okay. When will California start paying on refunds if you've already filed? Well, I've had a lot of my clients already get back their refunds. I've had a lot still not. I've had a couple still haven't got anything from 21. More federally than state. California should get it pretty soon. The feds could be a bit slow, but they're better this year than last year. Last year, there's people who still haven't gotten it yet. And that is crazy, huh? You can't deduct gambling losses against wins unless you itemize your deductions. Well, that's not going to be a Schedule A itemizable deduction. It's going to be deductible on Schedule C. That's where you're going to want to deduct it. I wouldn't deduct it on Schedule A. It's not that kind of deduction. Okay, what if you don't get sent a W2G from the online sportsbook and you have a profit? Well, how does anybody know you have a profit if you didn't get sent the W2G, right? So again, it's a system where everyone else is reporting everyone else's income. The IRS only knows what you or somebody else tell them. Legally, it's your obligation to self-report. But if it's from some weird offshore thing and nobody knows about it, the reality situation is they probably don't know about it. Now be careful because, like I said, it's your legal obligation to pay taxes on all the income you actually received, not what was just reported. But again, the IRS only knows what you or someone else tell them. And you said this, you reached out to the sports book and they said it will not be issued. Yeah, I mean, if you have, so what? So here's what we should do. We should give the IRS a call and see if anything was sent to them. If not, no harm, no foul. If they are, then at least you know you're safe. But it sounds like that's not the case. Anyways, it was great talking to you guys. I gotta go. Remember, the IRS only knows what you or somebody else tell them. But at the same time, it is your legal duty to pay taxes on all the income you received. Just keep what you do with that information is up to you, but knowledge is power, right? So you guys have a great one.